Okay, time for another Q&A. It's Thursday, March the 13th, 11:54 a.m. Costa Rica time, which puts it almost 2 p.m. New York time. SPY is now officially in correction territory. If we finish here, if we close here, it is official. We are in correction territory. Everybody down here has gone to the beach today, so I am alone. However, I do have some work still going on inside the house. I'm sure you hear rocks being poured into the. I have this little river stream that runs through the house, and we're cleaning the rocks and putting the rocks back in. That's what you're hearing. Let's begin. Within the unemployment data, especially places like DC, they will not reflect job cuts being done for many months, likely 8 months out. For those that took the buyout, yeah, the benefits wouldn't kick in for 8 months. However, I believe that when an employee is separated from their job, a record of employment must be filed. And that employee is free to file an initial claim. In the record of employment that's filed, there is a statement of how many weeks of severance they're going to get. So when that claim is filed, the benefits wouldn't start until after the compensation period ends. So I do believe you could still file. However, if I'm getting paid for the next 8 months, I'm in no rush to file. I have lots of time to find another job. Perhaps I'm not really going to. I mean, 8 months out, I think I'm going to get another job. Why would I even waste my time filing, right? So, on that sense, probably would not show up. But some people are being let go without long severance periods. So I would expect something to show up there, especially if their goal is that 2 million, bringing federal employees from 23 and 25 million down 2 million. If that is the goal, that's going to have to show up at some point. Nice to see you include timestamps in the description. I've done that for quite some time now. Give your outlook on mortgage REITs given the declining 10-year yield. I don't know what to say about mortgage REITs. They hedge out the interest rate, right? So you have, let's just think about the whole yield. You have your risk-free rate in here, which more MBS usually has a duration very close to a 10-year, even though the MBS is 30-year. It's fully amortizing. So based on the weighted average time to cash flows, the duration, the sensitivity to interest rates of an MBS is like that of a 10-year. And here is the spread for the MBS. Most mortgage REITs that I've seen will short the Treasury. And then they will use leverage 7 times, 8 times, up to 12 times, depending on the regime that they're under. And they will lever up the spread so that the mortgage REIT makes money by the spread contracting. So the 10-year dropping might increase mortgage activity, but so far it hasn't had much of an effect on the spread itself. And the 10-year dropping, while it will increase the asset value on the balance sheet for mortgage REITs, they would have a corresponding loss on the hedge because they hedge out the interest rate risk on that. Declining yields have been positive for mortgage REITs, which is true because declining yields, tighter spreads. Mortgage REITs are to sell MBS and buy the 10-year. If the mortgage REITs are to sell the MBS and buy the 10-year, they would not do that. I'm curious to understand what effect this would have on their dividends as well as their total return. They would not do that. They'd probably be restricted from that because they are a mortgage REIT. That is their job. Does your applied series cover REITs? It does, particularly mortgage REITs. I do. In detail, I would say in enough detail that you can understand what a mortgage REIT does. I use agency as the example, and we walk through agency's 10K. I do explain how they hedge out. I do explain how they lever. I do explain the dollar roll because that is a big source of income for the mortgage REIT. So they can bet on the direction of price with the dollar roll. And they have been doing that. So yeah, it does cover that. However, I don't know that you really need to buy the entire applied level if you're really only interested in that, because in the sector studies, there's one sector for financials. I'm almost done the understanding insurance video. So there'll be understanding insurance. There is mortgage REITs are in there as well. There is a five-part series on understanding banks and how you can evaluate banks and understanding how what industry or the type of industry banks operate in. And there's a three-part series in there on the Federal Reserve. Understanding repos and reverse repos, understanding the Fed balance sheet and reserves and what an ample reserves mean. I will be spinning this out into a separate product that you could just buy if you say, well, I really only care about the financial sector. So when I get back to Canada on Monday next week, I will finish up the understanding insurance video. Once that's packaged up, I will probably spin that out as a separate sector study that you could just buy the financials. I don't know the price, but it'll be significantly less than buying the whole applied analysis, which gives you all the sectors if you're really only interested in one sector. A few months back, you were supporting the idea that tariffs mean a stronger U.S. and now suddenly mean weaker U.S. What has changed? Well, it's the method that has changed, right? So you can make the argument both ways. This is the beauty of a complex system, is if you are trying to make the argument that tariffs will support a stronger U.S. dollar, you can do that. You can put out half an argument and do that. If you are trying to support the case that tariffs will lead to a weaker dollar, you can do that, and it's all based on your assumptions. No one policy has nothing but advantages. Any policy has advantages and disadvantages, and those advantages and disadvantages can shift depending on the method in which the policy is implemented. So if the U.S., let's say here are rest of the world, all the other countries, if the U.S. implements a tariff on the rest of the world and there is no retaliation, it would make these countries, the currencies in those countries weaker. They would weaken to offset the tariff, and that would make the U.S. dollar stronger, and tariffs would generate revenue. If, it's a small word, 2 letters, IF, but it is the biggest word in the English language. If so many people have run in trouble with blah, 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 if they're conditioned. So those are conditional statements, and that if is a big word. If there is no retaliation, that's your assumption. Well, there's retaliation, so all bets are off, right? You can make your conditional statement. The U.S. dollar will strengthen if tariffs are applied to other countries that do not retaliate. Their currencies would drift downwards to offset the amount of the tariff, and with the currency drifting downwards, it would sort of, if they still import the same amount, create inflationary pressure in those countries. Well, we don't have the if anymore, so we don't have the statement. If the conditional doesn't exist, the statement doesn't exist, so we cannot say that. Because you have retaliation, and not only tariff retaliation. Now, this is I think something, or 2 things that was not counted on. Number 1 was the U.S. is so strong, you need the U.S., we don't need you, we're going to tariff you, and you're likely not going to respond because it would be even worse for you, and if you did respond, we'll just double the tariffs. So we're going to punch you in the face, you're going to thank us for it. If you attempt to protect yourself, we're going to punch you twice. That is basically the terms of trade from the U.S. right now. Well, there are retaliations going on in terms of tariffs, but worse is the non-tariff retaliation, which is consumer sentiment. The anti-U.S. services and goods sentiment from across the world. You're reading headlines about this everywhere. And in Canada, it is a big thing. The amount of tourism from Canada to U.S. has dropped right off, and they're opting to spend their money within Canada. One border crossing in Manitoba, which typically has a lot of trucks crossing into the U.S., dropped to nothing, not even crossing into the U.S. at this point. So just the amount and when the Canadian goes to the U.S., that is counted as an export for the U.S. because the U.S. is exporting its tourism, meaning that a Canadian is importing its tourism by going to the U.S. Just all of that's not even counted in the tariffs. So there is lower demand for the US dollar and more demand for other currencies by saying, I'm not going to the US, I'm going to go to Europe instead. I'm going to go to South America instead. I'm going to go to Australia instead. So that is showing up more. So that's the big deal there. I know you hear that beeping in the back. Somebody's trying to fix the fridge and it's just not getting colder and colder. I say I need a new fridge. Everyone says we can fix it. No one can fix it. I say let's just get a new fridge. I don't know why the pushback. Let's just get a new fridge. Anyways. Academic background, that's basically first-year university finance, struggling to understand the concepts you mentioned in these market outlook YouTube videos. What study resources can I leverage to learn? Well, you're early in your learning career. It will come. It will come. Some of the things that I talk about, you should be able to understand. Other things that once you get like level 1 CFA behind you, level 2 you'll understand. Other things are level 3. Other things would require quite a few years of experience before you can actually see the relationships I would be discussing or talking about. It will come in time. It will come in time. But there is a video on my channel, Understanding the Market Outlook. That will help you somewhat. Can you explain in more detail the mechanics of the dollar roll you mentioned with MBS at 16? I can do it briefly, but in detail, if you want in detail, when I spin out the sector studies for financials, you can get it. It's based on a constant dollar amount, 1 million and 1 million. And you're either going to buy and sell, usually 30 days, or sell and buy. Right? So this is a long position, this is a short position. And what you're going to do is you're going to sell $1 million of MBS, and that'll be however many bonds fit in a million, and over here you're going to buy 1 million of MBS, and you're hoping that you get more bonds for that million than the bonds that were in the million that you sold. In other words, you are shorting MBS for a period of a month. You're going to sell them, and you're going to have somebody redeliver back to you 1 million MBS. So if you sell them at par, let's say each bond is $1,000, you will sell 1,000 bonds basically, and if the price of them fall, you may get back 1,037 bonds MBS that will mature at par. You'll get all your principal plus the interest back. That is a dollar roll. You're simply taking the same dollar amount, you're just rolling it, right? Here you're buying and then you're selling. This is where you think the price of MBS will go up. So it's only $1 million. So let's say you buy 1,036 bonds for $1 million. You think, well, I only have to deliver 1,000 bonds for the $1 million. I get to keep 36 bonds for free. And that is the basis of a dollar roll in a very high level way. So if you're a dollar roll expert, don't say, oh, you left out a lot. Yes, I did leave out a lot, but in a very high level way. That's basically what's going on. I think you said in the past that Vega trades are directional trades on volatility. True. And gamma trades are volatility trades in any direction. Yeah, okay. So long straddle is the same as a gamma trade. Well, I don't know that I would try to compartmentalize that and say this belongs here, this belongs there. If you're long a straddle, what you are expecting at that point is the underlying to move. You just don't know where. But you think it's really going to move. It's really going to move up or it's really going to move down. You just don't know which direction it's going to move in. Typically, when you're setting something up like that, the volatility is already there. So it's usually before earnings that somebody thinks about a long straddle. If volatility is very, very low and you're putting on a long straddle, you must have a belief that volatility is about to explode. But before earnings, if you think, whoa, it's going to get really volatile, it's already volatile before earnings. After earnings, volatility drops significantly. So that is hope. You're thinking that I'm going to get something on the change in delta, and something in the increase in the premiums because I'm long both. Something in the increase in the premiums because of the increase in volatility. So if you have a stock that's kind of doing this, and you think it's going to start doing this, a long straddle makes a hell of a lot of sense because the premiums on the call and the put will go up. On the other hand, if you have a stock before earnings that's doing this and you expect it either to do this or do this, you're going to make on one and lose on the other, but the market will have anticipated that. And you will be buying options at very high volatility, which most oftentimes you will lose. Why MBS are on the Fed's balance sheet to begin with? Because in 2020, when the economy shut down because of the pandemic, there was a belief that the housing market would crash significantly. So the Fed, in looking at let's just be safe, rather be safe than sorry, let's just buy anything, so they bought MBS. And continued to buy MBS when they shouldn't have, and that was a bit of a problem. That's why they're there. Struggling to understand what variables buying or selling MBS and long government bonds affect. Understand what variables buying or selling MBS and long-term government bonds affect. I don't know how to answer that. Why is the focus on the 10-year? The 10-year is sort of a pricing for a lot of credit products in the market. The duration, the sensitivity to changes in interest rates of MBS, 30-year fully amortizing bonds, is roughly equivalent to the 10-year non-amortizing government treasury. What is a 5-year, a forward 5-year, 5-year and real yields? That's the 5-year yield 5 years forward. So if we think about a timeline, you can invest for 5 years, and then you can invest for another 5 years, or you can invest today for 10 years. This is the implied forward rate. And it is saying that if we figure out, if you take $1, what you'll have in 10 years, take this and what you'll have in 5 years, the rate here should make it such that when this matures and you reinvest, you should have the same amount of money. And that is the 5-year rate 5 years from now. So it is the 5-year rate that starts in 5 years, and that is a forward rate, right? So that's all that is. Could you please touch on the housing market monthly or so? Seems to be shifting recently with a lot of reports of high inventory. High inventory in some cities, in some regions, yes. Yes. I had a dream I was live in a class with you last night. We did do that. There was a class. I did have a class, and pizza did come in. You were asleep. You were the one, I think, at the back that was asleep. We did wake you up. So I don't know that was a dream. I think that really did happen. Worried about the inertia in the market from cult-like stocks like NVIDIA and MicroStrategy to the absolute conviction of experts on the U.S. economy featured on Bloomberg. I'm not following that sentence and how those two things connect. I'm not old enough to remember how it was during the internet bubble or prior to that. Unless I'm wondering if it was ever like that before, and if it was, how would you compare it today? Well, you can look at, I think you can look at it in two directions. Does the narrative create the demand for the stock, or do the fundamentals of the stock and the rising price create the narrative? Does NVIDIA have a high price because the media keeps talking about it, or does the media keep talking about NVIDIA because it has a high price? Right? So it can go both ways, that a stock begins to perform, its price starts to rise, the media starts to notice it, the story starts to form around it, which more people start to hear and go, oh, I never heard of that, and they're drawn to the stock, driving it even higher. And that is basically a combination of fundamental momentum and then a little bit of behavioral momentum on top of that for good measure. And some stocks are nothing but behavioral momentum, like MicroStrategy. And that's always been there. Sometimes the market becomes more behavioral than fundamental in its momentum. Other times it's more fundamentally driven than behaviorally driven. These days, I'd say it's neck and neck, really. You have some stocks that are really behaviorally driven, some that are very fundamentally driven, creating this bifurcated market where you have some stocks that just they're head scratchers. You look at their valuation, you go, I just don't understand. And then other stocks, you look at their very low valuation and you say, I don't understand either. That's probably because they're not getting a lot of news coverage. Yeah. So yeah, you can have good stocks that become stories, and you can have stories that then make good stock prices. Oil and gas question here. Suncor states their 2026 WTI break-even goal is $10. Suncor. Now, the West Canada Select is their appropriate benchmark. If the WCS spread is 15, are they really saying the break-even is 25? Why would they have a WTI goal? I'd need to read the paragraph that came from. There are sentences before and sentences after. It might be in a context where it's like, oh, well, this is what they're saying. I mean, if I take you for your word and they're saying their WTI break-even goal is 10, does Suncor have any interests in U.S. wells? I don't know. To say that that is your benchmark, the spread is a changing spread. It would seem odd that they would say, why not just say what their West Canada Select target is? Their WTI goal of 10 in U.S. dollars or 10 in Canadian dollars. That doesn't make any sense to me. So I would say, well, I would need to read the whole area where this is from, the whole context in which it was written, and what it is that they're trying to get done. I would have to read that first. So as of this statement, I don't know that I can comment on that to your satisfaction. If you had to set up a monitor to help you choose between allocation and tips or treasuries, which metrics would you include on this monitor to support your decision? There is really only one thing you're looking at, and that's the break-even rate. So if a 10-year nominal treasury is 4.2%, and let's say a 10-year tips is 2%, the break-even rate is 2.2%, and let's say that you are looking at a 10-year bond. If you expect the average inflation rate over the next 10 years to be greater than 2.2%, take the tips. If you expect the average inflation rate over the next 10 years to be less than 2.2, take the nominal bond, take the treasury. So you would look at break-even rates and you would just say, do I think that the average inflation rate over the next 10 years will be higher and lower than the break-even rate? If you think it'll be higher, well, then protect yourself from that inflation, right? If you think it'll be lower, you don't need the protection. You'll do better with the nominal yield. Thanks for the market outlook. I have a question I would like being thrown around. Are you on board with the idea that our tariff man only goal is to create uncertainty, shake down the yields in a deflationary crash? No, I don't think so. I don't think he purposely wants a deflationary crash at all. I think his goal in his mind is not only make America great again, but make America bigger again. Why are we not expanding the borders of our territory? Why are we not bringing manufacturing back here? Why are we losing our jobs? So I think that he really is thinking that way, and tariffs for him are a way of forcing companies to relocate to the U.S. or face high tariffs and not access the U.S. market, and to beat other countries into an economic pulp so that their companies and their industries are cheap to buy for American companies. And when American companies own most of the companies in the foreign country, well, what do you need the foreign government for? You may as well just become another state. I think that's his end goal. I think he'll fail at that, to be honest with you, but I think that's his end goal. I don't think he cares if he causes a recession. I think he cares little. I think he cares very greatly about his face being on Mount Rushmore as another expansionary president. I think he cares very greatly about that, and he cares very much about the legacy that he has. He wants to be remembered in history books forever and ever and ever. Well, I mean, you could be remembered as a president, or you could be remembered as somebody who changed absolutely everything, regardless of what the outcome is. And I think in his mind, he really does believe he can make America bigger again and make America great again. And he probably could if you have the right method. The method that he's using is wrong. I would say that that method is not making America great again, it's making America isolated again. And if he continues on, the world will unite without him. The world will unite without the U.S., and it's more like make America a pariah again. Well, not that it was ever, but make America a pariah as well. Isolationism is a very bad place, right? Any king, any feudal king recognized that unless you please your lords, you're not going to be king for long, right? So the lords are all the other Western countries. Unless you please your lords, you're not going to be king. Now, no matter what king you had throughout history, no matter how evil and how bad that king was, the king did recognize that you better make the lords happy, right? And because they were the source of all your armies. When you decided that we're going to war against this country, you called your lords and your knights in, and whatever land you gave them, they then assembled their army on that land, say, I stand with the king, I stand with the king, I stand with the king. So other countries are the lords. You got to make them happy. And he's not. So, if you're going to, call everybody names, threaten everybody, push them around, throw tariffs at them, they will unite without you. And that makes it extremely difficult to get done what you want to get done. Refi 510 trillion or whatever is on government debt that needs to be refinanced this next year. Refi on cheap yields to bring down interest rate costs on government spending. So again, why would Canada ever support the U.S. Treasury at this point? Germany wants to issue bonds. The Euro zone wants to issue bonds. U.S. is treating Canada bad. The U.S. Central Bank holds U.S. Treasuries. At this point, they say, why would we continue to buy your bonds and support you? We'll buy Euro bonds to make Europe great again, and that will become our market. They want to spend money to shift their production, to increase their capacity. Well, we'll supply them with our raw materials, and we'll buy their bonds. So this is not going to help refinance. If anything, if this continues on, as much as I've been a fan of duration, or at least I shouldn't say a fan of duration, I've hung out with duration because I believe that U.S. duration will pay. If this continues on, I may in fact say, you know what, I give up on U.S. duration. I'm not going to hold it anymore because maybe 6% 10-year yields are in the cards if you keep pissing off the rest of the world, right? There is a way to do this. There was a way to do this that would have gotten to that end, and that is gradualism. Gradualism. The U.S. does have low tariffs. They could have higher tariffs, but gradually higher tariffs to allow the system to adjust. But 25% tariffs on steel and aluminum within 30 days, do you honestly think anybody can build a steel factory in the U.S. in 30 days? Not going to happen. You got to give it time for capital to adjust. Now, why would they build a steel mill in the U.S. when Germany says they're going to spend this much and remilitarize? Why not build a steel mill in Germany? That's where the market is. Why not go there? They're not going to tariff us. You see what I'm getting at? There was a way to do it. This is the plan seemed rational. It's like, okay, I see where you're going. I see what you're trying to get done, but your method is way off. Way off. It's almost like rookie hour at the White House. Create uncertainty and deflationary crash. I don't think they intend to create uncertainty. They're getting uncertainty, but it's Biden's uncertainty. I don't know if you've listened to the White House press conferences. It's Biden's uncertainty. It's not Trump's uncertainty. It's Biden's uncertainty. Refi government debt. Make Fed print our way out of deflate. Well, I don't know. That goes no. Print our way out of deflation. Pray we don't get another wave of inflation. Oh, I see what you're saying here is that if you're going to have a deflationary crash, make the Fed print more money. I think if you have a deflationary crash, what the Fed would do is lower interest rates to zero. I don't necessarily know that they need to engage in large-scale bond purchases again, especially if you're trying to especially if international trade does shift. Other central banks would be less and less willing to hold on to U.S. treasuries because it wouldn't support their international trade. I get what you're saying. I think all of that is unintentional, but when you declare victory, you have to say everything is going according to plan. You know, that kind of thing while you pet your white cat on your lap. There should be a meme picture with Trump doing that, a little white cat on his lap with and petting it. Everything is going according to plan. And put the face of Elon Musk on the white cat. No, Howard Lutnick. Oh, somebody's going to do that. Draw a timeline of possible outcomes, events, and what would happen if tariffs play out. Well, it depends on that's complex to do. You know, it's more of a I don't know that a timeline would make a lot of sense as much as a game theoretic approach. You know, in terms of what you expect. Because he's turned a cooperative game into a competitive game. So you can think of trade as a cooperative game, a repeated cooperative game, and what is everybody's best strategy in trade? Or you can think of trade as a competitive game, and what is everybody's best strategy? It'd be different depending on whether you're competing or whether you're cooperating. If you're competing, trust is very critical. If you're competing, it's not so critical, but it becomes very expensive to conduct trust in a world, or conduct trade in a world with no trust, or very little trust. So that would be difficult to do because it really depends on what's the next step. So I don't know that I could draw out anything more than a whole bunch of if statements. If this and then if this would happen, then you can go here and then here if this would happen. All these if statements, I mean, no, I don't think so. I think that would just be fantasy. How long after it gets out of hand into deadlock territory? You think that's where we're headed right now? How long after he breaks something that can't be fixed? I think as far as consumer demand for U.S. goods and services, we're already there. I think it would take years to fix the damage that has already been caused, but it could be fixed if he reverses course right now and apologizes. Do you see that happening? Do you see reversing course or apologizing happening? No. So the good news is that as of tomorrow, we are done 7 weeks of the 208. So only 201 weeks left of this. And if, in fact, there is another election, maybe it'll be over. If there is another election, right? Could you explain the difference between Discord and YouTube? What is available there? Who participates and at what times? YouTube is where I put the market outlook, and then you put comments under the video, but that's not a community. That's just comments, right? You can answer someone's comment, and they can answer you, and that kind of thing, but it's not really dynamic, and you don't know who these people are, and you get a lot of opinions, strong opinions on YouTube, especially if you have statements that you're making that somebody doesn't already believe. Then they call you I get that a lot. They call you names. They call you misinformed. Oh, you're not saying what I believe, and you're misinformed. It's like, I can tell. I can tell that you're the one that's misinformed by the following sentences after your comments. So Discord is for the applied level subscribers, which primarily are charter holders and CFA candidates. So it's a much more financially educated market. Market, when you say a group of people, a marketplace, I call it a community. So that when the conversation that happens is on a higher level, right? So if you if you're in the Discord, just the news feed alone is fantastic. I mean, I love that news feed that goes on, because you have hundreds of people that are saying, here's some news, all from different headlines, all from different things I would never find on my own. You know, different things that don't show up in my news feed. I'm in love with that thing. Like, talk about crowdsourcing a news feed that's primarily about the financial markets. It's absolutely incredible, just that alone. And some of the channels that will be will be developed. There's one that I will be putting out. It's kind of like a value investor club, where it is only those who are qualified at producing really good research reports on a company, saying, what's your best idea? You must contribute one really good idea a year, fleshed out. Like, I'm talking about, you know, full report on this, and in exchange you get to see everybody else's one report a year. So I will be setting up a channel just for that, and that's going to be more elite. That's not available on YouTube. So if I draw a timeline, here we are now. Here is, let's say, the end of August. Here are YouTube comments. This is what's going to happen over time. And all of the comments for the market outlook will be moved to Discord, so that I put the market outlook, part of the market outlook, up on YouTube. The rest of the market outlook will go up on mm.com, or I can post the full market outlook on YouTube as a private video, and then that link would be in Discord. So only through Discord could you watch the private video on YouTube. I might just do it that way. At some point, I will open up the Discord for YouTube users. Your role would be A1, which means that you can view the comment section on Discord for the latest market outlook, but you cannot contribute. You can only view it. I will then, once I see you show up, I will then give you the opportunity of demonstrating that you have certain credentials. So let's say that you're a university graduate with a CPA. Well, then clearly we want to hear what you have to say. We want you part of the conversation. But if you don't have the qualifications, then you can go ahead and read, but there's probably not much that you can contribute. Right? Nothing really informed that you can contribute that the rest of the group would benefit from. But I will explain this more as we get closer to me turning off the comments on the market outlook, and then probably paring down the market outlook, the visible one, to about a 10-minute video, but the 1-hour video as private and available through Discord. How long does Applied Series subscription last? It never expires. So how it works, let's say here's 1 year, right? You get the Applied Series now, and as I add new content, you get it. And then at the end of the year, you never lose that content, but you don't get the new content. It is, I had a monthly renewal. I just went to one flat fee for the year. It is $50 for the year on renewal, and you continue to get the content. At the end of the next year, if you don't want to continue on, then you don't lose anything you've had forever. You can always refer back to it forever, but you wouldn't continue to get the new content. So I think that is a fair way to do it from here on in, given that Discord has a lot of value. And for Discord, I had to hire 2 people to manage it, of which, if you have the applied level, you do not pay to access Discord, but it costs me to provide Discord. So, yeah. Thoughts on Mark Carney? I don't think he's a politician. I think he was a good central banker. He has some finance background, Goldman Sachs pedigree. I don't know how he'll do as a politician. I truly hope for Canada's sake that he is a classical liberal, a liberal of the 1990s, and not another Justin Trudeau. Jury's out on that one. The jury is out on that one. If he's another Trudeau, a continuation of Trudeau, then it's not going to be good if he gets elected, or if if the Liberals win again because of because of a revival of popularity of how they handle the tariffs. That could happen. But if he is a classical liberal, and a classical liberal is one that is socially liberal but fiscally conservative, saying be who you want to be, do what you want to do, but we're not going to send anybody the bill. If you want to live this lifestyle, you go ahead and live this lifestyle, but don't expect society to pick up the bill for you to finance that lifestyle that you've chosen. That's a classical liberal. I don't know if you can hear the siren going off in the back, but somebody has an empty house and their alarm just keeps going off. So people are going into their house. You can't leave a house empty here for very long before this happens. So somebody at some point will cut those wires, and now you got squatters. You cannot leave your house empty. That will happen. In this country, if you get squatters in your house and they're there for a period of time, you can't get rid of them. You cannot get rid of them until they choose to leave. You can't leave a house empty. Let's see. I remember in one of the old Q&A you were asked about TA and indicators. And you said only use and still rarely use MAs, trend lines, basically support and resistance. Yeah, I mean, I'll look at it, but I mean, I'm not. It doesn't change my mind about anything. I just look at it, saying, okay, well, here we are. Here's what other people would be saying. You don't like this topic and think this is all just a waste of time or predicting the unpredictable. I do. I'm genuinely interested in hearing your professional opinion on why things like indicators, Fibonacci, this was funny, and figures are not working. You get pushback from technical analysts on why they're not working, because they do work half the time. So if you ever read a technical analysis book, it's easy to find charts where you have a pattern that looks like this, and then you have this kind of thing going on before it continues on. Well, you have an uptrend, you have a right pennant flag formation, which is a consolidation pattern, and the price typically continues in the same direction that caused it. 50% of the time, it goes down. So it's easy to find this chart and show it to you, and you say, oh my God, look at this. But they don't show you all the patterns where that pattern showed up, where it did not work. Right? It does not work as often as it does work. I would challenge any technical analyst to a contest. Let's pick 10 stocks, you draw your lines and your circles and your patterns, and then you figure out which way you want to go. I will flip a coin, 1 all the way through 10. I will flip a coin, and I will have a 1% trailing stop loss on all of them. I'll flip a coin. This is a buy, this is a sell, a buy, a buy, a buy. And I would be hard-pressed to believe that you could beat that coin toss. That's your benchmark, technical analysts. I don't think you could beat a coin toss. That's my challenge to you. I'm not sure if you're aware of this, but the numbers are still very low for unemployment filings. True. Majority of federal workers are either fired or accept a voluntary resignation or receiving pay and benefit. Yeah, okay, so we have talked about that. I have A3 access in Discord. I have 2 channels I don't access to. Costa Rica, level 4 launch. So Costa Rica is for people who have been to my home in Costa Rica. I do have 3 weeks here. I had 5 people the first week, 5 the second, and 6 the third, where we go through markets together. And I show them different techniques for both momentum and volatility, because those are the big guys. If you can trade vol, if you can find momentum, you'll do quite well. Buy and hold, I don't need to show you buy and hold. Everybody can do buy and hold. You don't need me for that. But momentum, there are different flavors of momentum. Big difference between fundamental and behavioral momentum. And volatility, same thing. How do you trade vol without VIX? VIX is a hard thing to play. How do you trade vol in the stocks themselves, right? A hint here, you're going to need the options to get it done. So we do that. And for those 16 people, they are in that room. And because they're in that room and because they know how to find these things, now they can discuss what they found. And we did find one really nice fundamental momentum one last week, or this past week, and we're diving into it. And in the Costa Rica room, everybody that crowdsourced this said, well, there's this, there's that, we found this, somebody's looking at this part of it. you're basically part of a team at that point. That is, that you're sharing ideas with and bouncing ideas around. And we found some pretty good ones. I'm not going to discuss it because what happens in Costa Rica, you know the saying, stays in Costa Rica. So to do that, I give them a Costa Rica room. A4, these are people, because of the nature of their job, cannot contribute to public forums. You know, they'd like to be in a conversation about something because they say, well, I'm looking at this, what do you think? Or you're looking at that, here's my opinion of this. But they can only do that if it is an invitation-only forum where they are invited. If it's public, they cannot contribute. So this is an invitation-only forum for people who cannot, because of the nature of their job, discuss anything openly. When I say openly, in an open forum. I've started a super simple long straddle strategy, which is going well so far. Well, if you know, the theme this year is volatility everywhere, so that's probably working quite well. You've mentioned that you have videos about trading vol, but I'm not sure which one specifically. Could you point me to the right one? If you go into the applied options, you will find one of the folders there has just got a bunch of volatility trades in it. And then in portfolio construction, way at the very bottom, there's volatility trading by benchmarking. He continues on with his tariff threatening. I see USD heading down. Why? Because he will unite the world against the U.S. and the demand for U.S. goods and services will drop. We're seeing that in Canada in both goods and services. And if you don't need goods and you don't need services, if you're not traveling to the U.S., you don't need to sell your Canadian dollars to buy U.S. dollars. That demand is gone. If he decides to stop the threatening, and not only that, there is a movement to divest out of the U.S. You do have some people in Canada who own properties in Florida looking to sell those properties and bring those dollars home. There is a concern, and a growing concern, that Trump may, if he really is serious about Canada, freeze any Canadian assets in the U.S. It would be consistent with his goal. That would be consistent. So rather than wait for it to happen, there is a growing movement in Canada to say, listen, if I got assets in the U.S., if I got money in the U.S., I'm bringing that stuff home now, before that happens. And I have money in the U.S., and I do worry about that myself. It's significant, and I think, should I bring that money back to Canada now? Should I just, get rid of the U.S. money manager I have, which is J.P. Morgan, and say, look, I can't take the chance. I just can't take the chance that he freezes foreign assets in the country. I think today he said that something about the arresting foreign nationals of a country, of a hostile country. Well, what if he declares Canada a hostile country? Right? These things, this is what happens when you start doing this kind of stuff. You may say, oh, that's a low probability event, but still, narratives will go there, right? It doesn't take much for a narrative to start. And if a significant amount of your wealth is in the U.S. While you're living in Canada, you look at it, you say, well, I can't even take the chance of that. That's the narrative. You will create that kind of reaction, even if it never happens, even if it has a low probability of happening. Just the idea that the idea was risen, that it's even being talked about, is enough for some people to say, you know what, can't take the chance. Too big of a chance to take. That is why is a trade war on too many fronts. And the methodology of the trade war is belligerent. It is almost a declaration of economic war. It is belligerent. That's the wrong way to do it. That is a path to isolationism, and that means a lower U.S. dollar. If he decides to stop threatening and pursue a weak U.S. approach, I see the U.S. going down. Why do you assume that if he stops threatening, he will pursue a weak U.S. dollar? Because Bessent has said so much. And he has said so much that if you lower yields on the long end of the curve, you will reduce the value of the U.S. dollar, because it becomes less desirable to hold those yielding assets, because they will have lower rates. The U.S. can solve a lot of problems by implementing 2% tariffs and getting the long end of the curve down and lowering the value of an overvalued U.S. dollar, by the way, of lowering the value of the dollar. Next month, and add another 2% on, lower the dollar even more. Next month, another 2. When you see that coming and you see that happening over the next 2 years, behaviors will change. Capital will change. Trade flows will change. And without any negative sentiment, because it's creeping up so slowly you don't even see it. But that's not what they're doing. They're doing it. They're doing it very belligerently. Trader workstation quit. Okay, quit it. Quit. Let it. I don't really need it. I'm not watching it right now. Initial jobless claims data at the federal level. Do you think we are not seeing any of the Doge actions? Okay, well, we've already discussed that. Recent positions, you're selling put on NVIDIA expiring 417, not 317, 417. Market Watch, opinion about an analyst by the guy might have a plan to induce an engineered recession so that it becomes compelled to decrease. I think that's an unintended consequence of what he's doing. And because it's an unintended consequence that does have some benefit, the conspiracy theories start that says, well, if the unintended consequence has a benefit, then maybe it's not unintended, but it is actually an intended consequence to get that very thing. Every action you take will have unintended consequences. It will. And if somebody is looking at what you're doing, they may attribute your motivation to the unintended consequence and say, that's what you wanted all along, isn't it? Anybody ever get in an argument with their significant other? And you were accused of something like that? You wanted that all along. It's like, no, it just happened. That just happened. I didn't want that. And it's like, that's exactly, I think, what's going on is that, hey, listen, this is going to be a consequence of what he's doing. Maybe that's what he wants all along. No, I don't think that he wants that. Besides, if he did want it, he would be claiming victory for it, saying everything is working according to plan. But it's not. So this is Joe Biden's economy. This is Joe Biden's stock market correction, right? All the bad stuff belongs to Joe Biden. Remember, he was a total disaster, the worst president ever. You know, other than Obama, which was a total disaster and the worst president ever because it wasn't me. That's the guy. Can't find the latest market update in the MM app. I don't know what's going on with the MM app. I really can't comment because it's not my app. So I'll pass on that. It's unclear how the U.S. can do... actually, let me go back to that. I do believe the market outlook, not the market outlook, but the applied level, along with the market outlook, should have its own app. I do firmly believe that I can't really rely on the MM app because it really, I don't own the IT department. If I want a certain feature or function, I can't just say, hey, do this for me. They're not my employees. I can say, this would be nice to have, and if they agree that it's a benefit to the rest of the company, they may say, yes, we'll put a ticket out and we'll get to that. But I do believe that the applied level should have its own app because there's some neat things that I can do in the app that I can't really do on the website. There's a lot more engagement I can get on the app that is much harder on the website. So I do believe I should have an app, and I did speak with someone last week, wickedly intelligent guy, that I think may be able to help me with that. And he knows who he is if he's listening. I got your name on my list. I'm unclear how the U.S. can devalue its currency effectively. Just remove the premium that you get for holding it. Lower the yield on the treasuries and lower the premiums for risk. In other words, make your investment in your market so unattractive nobody wants to be there. Now on that front, you could say that looks like what he's doing. He's not doing that on purpose. This is an unintended consequence of the action that he's taking. What do you have on the for this year on your equity risk premium? You actually have a negative number. You're actually losing money on it. You're not getting paid for that risk. You're actually paying for the risk of being in U.S. stocks right now. And honestly, I think over the next year or so, you will pay to be in U.S. equities. I do see, if this continues on, a slow bleed downwards, maybe 40, 50, 60% down from all-time highs. A slow, long bleed downwards. I have increased my short position on U.S. equities, and I am giving serious consideration to going flat on all U.S. stocks at this point and just being short U.S. equities and long other countries' equities, because if this continues on, it is going to be a slow, long bleed downwards. Will there be recordings of Discord live streams? No, I'm just going to, when I get back to Canada and I reorganize Discord, because we have one channel that says, give me some ideas of what you want. Lots of really good ideas in there. So once we fix that up, I'm going to have set times where I'll be on Discord, and that'll be it. U.S. takes a soft dollar approach. Wouldn't that demotivate large holders of U.S. Treasury and foreign currency sell off their holdings? I don't think you need a soft dollar approach to demotivate holders. All you need is to open a trade war against them, call them names, push them around, and be belligerent. And declare an economic war on them, and you will by default convince central banks to stop holding U.S. Treasuries, which will begin the decline of the U.S. dollar. It seems like Tariff Man has put his own country in a lose-lose situation. Right now, with his method, absolutely. There was a way to do this. Besant had the right way to do this. But he's not going to take Besant's idea because it's not Trump's idea. Trump must own the idea no matter what it is. You can give Trump the most brilliant idea in the world, and he'll say that would be a disaster because it's not Trump's idea. If you want Trump to do something, you must suggest it to him in such a way that he thinks it's his idea, and then he will do it. He's, I think, easy to play that way. How would you trade volatility in bonds? That is a little bit more difficult. If you're trying to trade it in bonds, you'd find a proxy for a bond that is an equity. However, the volatility in the equity is still very low. Even TLT, under 20%, there's not a lot of volatility to trade there. ZB, you can trade it. You can use the options to trade it on the bond futures. You get some volatility there, but you got to have appetite for risk at that point and a large enough account to get that done. Other than that, you don't have to harvest volatility everywhere you see it. There's plenty of volatility in equities. Mentioned some IV stats on SPY. Can I assume you also consider IV leans to provide more insights on potential trades? Well, implied volatility, if you're going to use options, the implied volatility gives you an idea of how expensive or how cheap options are. So let's say the historical volatility of a stock is 45% and the IV on the stock is 65%. That is telling you, based on historical volatility, premiums in the options are above normal, or that there are good premiums in options because of the IV. So if the underlying continues to have the volatility that it normally has historically, that means that people have bid up, or participants have bid up the price of the options beyond what the volatility of the underlying implies. So there is money to be made there. Are you considering investing in real estate in Europe? No, not yet. No, never thought of that. Starting to get worried as a Canadian when I hear redrawing the border. No kidding, right? What president has ever said that? You know, that's why I think Canadians are getting nervous about their assets and their money in the U.S., that there could be a potential freeze on Canadian assets. But if you become a 51st state, you'll get access to your assets again. You know, if you all the Canadian banks that have branches and own banks in the U.S. freeze all Canadian assets. Any Canadian company with a factory in the U.S. freeze Canadian assets in the U.S. Individuals freeze them, freeze everything in bank accounts, and say, listen, if you could become part of the U.S., you get, you know, your assets are now U.S. assets, you get them back. If you're going to redraw a border, belligerently redraw a border, state openly that you want to make Canada a 51st state, declare economic war on Canada, why would you stop there? Why wouldn't you freeze Canadian assets, right? He, not you listening, but he opened the door to that narrative being something that you must pay attention to. What president does that unless you plan to actually economically take over Canada? I know, redrawing the border. What's the probability that he uses it as a negotiation tactic? I don't know that he's going to negotiate as much as he's going to threaten, bully, and just force economic pain on Canada. Well, Canada has other alternatives. I mean, we can send all our lumber to Vietnam. We already do. We don't have to send any of it to the U.S. We can send our uranium to other nuclear countries, other countries that have nuclear facilities to generate energy. We don't have to give it to the U.S. We can pretty much put a whole bunch of cities in darkness in short order if we do that. I mean, it's not as if we don't have weapons in Canada. Well, we do. I also wonder if Canada-U.S. relationship changes with the new Liberal. I don't think so. I don't think so. Will you someday show us how to do research on a certain topic? Maybe finance or something. I want to know how PhD guys do it. Well, let's say PhD candidates or PhD holders, because there are lots of female holders. So let's try to say that, the woke revolution was a bunch of nonsense, but there were kernels of truth within it, that perhaps we referenced the masculine far too often. If you want to know how PhDs do it, it takes about 4 years to show you. There's no easy way to describe it. It's just you have to have a deep understanding of the philosophy of knowledge to sort of understand the methodology. It's not just, hey, here's some statistics. There are many methods, depending on what your ontological assumptions or ontological beliefs are, right? So it's nothing I can do in a short period of time. Opinion about risk of entrepreneurship. Like when to take it, what risks to take. Well, I mean, it is a risky undertaking, much like anything else. When to take it is when you have the solution to a problem, right? If you're going to do anything entrepreneurial at all, I think it should be required watching Harvard Innovation Labs on YouTube. They got, I think, a 10 or 12-part series taught by 2 venture capitalists. If you're going to open or start any business, this is required watching to first of all figure out if you even should open a business. Like, it purifies your idea, and I strongly recommend that. You mentioned that the dollar could weaken regardless of whether Trump escalates tariff threats or shifts to a soft dollar. It's already weakening. In the last few weeks, it's weakened quite a bit. He is already isolating the U.S. quite effectively. Just the non-tariff reaction is isolating the U.S. How these scenarios might affect market sentiment. Well, I would say how it would affect U.S. equity sentiment. Negatively. So far, negatively. Capital flows. Capital can go anywhere. If there is a threat that the U.S. will freeze foreign assets in the country to bring other countries into economic submission, money will flow somewhere else. Again, let me say, I have money with J.P. Morgan, and I am concerned. Not crazy concerned, but I think about it every day, and I go, should I bring it back? I mean, I sent it across the border at $1.34. We're now at $1.44. I got a nice return just on the currency alone. Should I bring it back to Canada and just pay the taxes on it invested there, or leave it where it is and risk it being frozen until the city I live in becomes part of the U.S., of which it would, based on how we redrew the map. I'm in the Niagara region in Canada. I would be in an American state. I wonder if that means I have to buy 87 guns. Let's see. Could you elaborate on how these scenarios might affect my call? Already did that. Are you with the boys in your house right now? Yeah, was the third week. It's the last week, and on Thursday, everybody goes to the beach. So 3 vehicles showed up. They all piled into those 3 vehicles, and they're all headed down to look at the alligators at a river, and then head to the beach. A private beach, but still a beach because, I got that kind of connection going on. What are you guys doing? Well, we can't really talk about that stuff. Do you have some programs that you listen to would recommend for people starting out as a retail investor? Did you listen to all the Fed speak? Not all of it. Not all of it. Not so much anymore. It was a thing, but not so much anymore. There's only one person you need to listen to, and he doesn't speak on a schedule. It's whatever, and he doesn't speak from a written transcript. It's whatever comes to his head in the moment. So it's random at this point. Were you keeping up to date with every Fed speech in period 21-22? Nah, not every speech. Not every speech. I mean, once you hear, Waller or Bostic speak a few times, you pretty much know where they stand. You don't have to listen to them each and every time, but not every time, and less so now. What does it matter what they say now? Like, what does it matter? There's nothing. Next Wednesday is the Fed meeting. I doubt that changes anything. Like, no, I mean, it's not. It's nowhere even near the biggest concern. The top 3 things right now are Trump, Trump, Trump. That's it. That's tariffs, tariffs, tariffs. Trump, Trump, Trump. That's it. There is nothing. There is nothing else in this market other than that. What would I recommend listening to? There are lots of good channels out there. Whenever you get to a channel, I mean, you'll know who the person is. Google them and see what their background is. I mean, if it's a 22-year-old high school graduate, move on. But there are lots of people out there with very good pedigree, with very good background to listen to. Broke down employment change, high school, college students, college grads. Could you provide more information why you think college students delays dropouts would be positive? I have no idea. I don't know. No idea. Could you explain why QE would lead to a weakening of the dollar and why that would be beneficial for the U.S.? There's no QE going on right now. QT is going on. No QE. QE may lead to a weakening of the dollar. It may lead to no effect on the dollar. It may lead to a stronger dollar. There's no real indication. I mean, if QE is done to weaken the dollar, well, then it'll weaken. But if QE is done to do something else, it might actually strengthen, especially for a safe haven currency. If you say the Fed is going to engage in QE, what's the effect on the dollar? I can make the case that the dollar will strengthen. I can make the case that the dollar will weaken. I can make the case that it'll probably be unchanged. There is no, oh, if they do this, it's definitely going to be this. Why would it be beneficial for the U.S.? Well, the U.S. has an overvalued currency as it is right now. But, you can't say we have some of the highest money market yields in the Western world. Our equity market is on fire. It returned 25% back-to-back years and not expect money to show up. You can't keep claiming you're the best market, the best economy, the best place for capital, the best place to make money, and not expect money to show up. And when money shows up, it'll increase the value of your dollar. If you want a weaker dollar, Mr. Trump, start saying about what a shitty place this is to invest in. What a terrible place. You're just going to lose your money if you show up here. Bring your yields and rates down to 0% and say, you're going to lose money in our markets. You're going to lose money in our markets, and we're going to nationalize any business that you set up. And then you'll get a weaker dollar, right? I mean, if you keep bragging about how great everything is, don't be surprised when money shows up. Mentioned housing would look attractive when mortgage rates drop to like 5%. Yeah, looks like home builders are now down 30. Yep. You expect more downside? I expect more downside in almost anything U.S. at this point. If again, big word, right? If the Trump administration continues on the path that they're on now, this is a short everything market, in my opinion. Do you expect more downside while we wait for rates to drop? Yeah, yeah. Well, uh, I don't expect significant upside. With everything that we have right now, I don't expect significant upside. Maybe in the housing, I don't know if I'd say, oh, there's a lot of downside, look out below. But I would say if you're looking for a recovery of that 30% drawdown, eh. The other thing is if you think the S&P is going to go on and print new all-time highs this year, I would I think confidently say that story is dead. Is it true? The less people depend on the U.S., the less of a superpower we become. Yes, yes. We keep isolating from our trade partners, other countries will just rise up and prove they don't need the U.S. Well, prove is a big word, but other countries will rise up and move on without the U.S., yes. I think they'd rather not, but if the U.S. is going to pursue right now, a very belligerent trade policy, no one likes that. Yeah, I think that is already going on. We will just become a smaller part on the world stage. That is true. Other countries are already on this trend. Yes, yes, that is the danger. Consider doing a video on U.S. debt levels path and its impact on the U.S. USD as a reserve currency. I feel like it's a growing issue. It hasn't caught on yet with the wider public. Hasn't caught on. That was the whole reason why 10-year yields went up 100 basis points while the Fed cut rates 100 basis points is because, oh my God, have you seen the debt? Despite being repeatedly brought up by people like Hank Paulson, Ray Dalio, and most recently the Fed, I agree with most of your arguments, TLT, but given that the debt continues to rise along with the deficit, creates problems in my view. That's also what happened to the Netherlands and the UK when they began to decline as world powers. I don't know that the debt will be the decline of the U.S. If it were just the debt, there's already eyes on it. Part of fixing a problem is first of all recognizing that you have the problem. So if people that can control the outcome recognize there's a problem, there's most of the solution right there. They've recognized it's a problem. They will work to solve it. It's when they don't recognize it as a problem. And that was the issue with the Democrats is you got the very real feeling that they didn't recognize the problem, that they just didn't see it as a problem, which is the bigger problem. So I don't know that I would say that the debt is what would lead to the decline of the U.S. I would say the leadership and the methodology that the leadership is pursuing is the problem right now. That is the bigger threat, and the bigger threat to yields. Because if other countries decide, you know what, patterns of trade are changing, we trade more with Europe than the U.S., that means our central bank will have to hold more euros and not U.S. dollars. That will reduce the demand for U.S. dollars and U.S. treasuries. And if you want to see high interest rates without inflation, do that. Do that. Keep doing that. Germany's 10-year yields are back at 2023 levels in part to massive spending announcement. Not sure about your mega thesis since there is, you can't. I don't know that you can conclude that the thesis is wrong in 7 weeks. In fact, in 3 or 4 weeks, it's going to take a while to play out. Risk of rates going up higher is always a risk. Sure, some European countries may be unable to shoulder the debt burden, may result in Germany. Yeah, if, or other countries can start buying European bonds and buying fewer U.S. bonds. You can make any argument you want. You can make an argument that it can't be done in Europe and the U.S. wins. You can make an argument that the U.S. loses and everyone else wins. This is the issue about the future. It is unknowable, and in large part depends on the interactions of everybody in a system that has no solution. Right? Only trade-offs. Who knows? How is this better for Europe's fiscal situation? Well, if if the spending creates growth, then yeah, it is better. If the rest of the world can steal growth away from the U.S., then it is better. Spending a little bit to get more growth, sure. This contrasts with the divergence in rates for the U.S. Jim Bianco argued that Trump may be forcing a recession. Yeah, I don't agree with that. I don't agree with that scenario at all. I don't think he's forcing a recession. I think he'd rather not have a recession. I think he'd rather see the economy firing on all cylinders and the stock market hitting all-time highs. Then it would be Trump's economy, right? But I don't think he cares if it's a recession. I don't think he's trying to cause one. But in the end, if he creates one, I don't think he cares. I think he cares more about being an expansionist president, and I think he cares more about creating his own wealth. Did you see the headline today that the Trump family is in talks with Binance to acquire a stake in Binance in exchange for a pardon, the 2023 conviction? Give me some part of your company and I'll give you a pardon, right? Give me some part of your company, I'll give you a pardon. I wonder how many shares of Tesla Donald Trump got for openly promoting purchasing a Tesla and reading off some of the sales deals available on Teslas. I wonder how many shares of Tesla he got for that. My prediction still holds that in 2028, I said before, when Trump leaves office, it's debatable whether he'll leave office. In 2028, my prediction is that Trump will be the richest man on the planet. By far, Trump will be the richest man on the planet. They're not even trying to hide it anymore. They're not even trying to hide it anymore, right? Because it's the hiding that makes it look illegal. Do it out in the open. Do your extortion out in the open, and you can always say, I never made any secret of that. You can commit a crime right out in the open and say, well, I never made any secret of that. It's when you do it in secret, suspicions start rising. Do it right out in the open. Crazy stuff, huh? Crazy stuff. Europe has a long-term reliance on natural gas, and we know gas doesn't come cheap anymore once Russia cuts its supply. Well, neither will steel or aluminum to the U.S. Neither will uranium to the U.S. Neither will sour crude to the U.S. And in time, neither will electricity to the U.S. I mean, we could say the same thing if you cut off your trade ties, trade that has evolved due to efficiency, corporations saying this is the most cost-effective and most efficient way. What you're saying is let's become less efficient and more expensive. Every country will experience that. It's not as if it's the U.S. gets all the good news and everyone else gets all the bad news here, right? This will create higher costs for the U.S. Period. Example, Trump is hoping. I had an interesting thought the other day. Could Trump's strategy on tariffs be explained by the prisoner's dilemma? I don't know if it could be explained by the prisoner's dilemma, but you could analyze it with the prisoner's dilemma. Trump is hoping other country does nothing, so the U.S. benefits. And if if no other country retaliates, if the U.S. institutes tariffs on everyone and no one retaliates, yes, the U.S. would win. The U.S. would be the winner. Every other country would be the loser. But if I know that you're going to do something where I can only lose and you can only win, my best strategy is to do the same thing back to you because I'm already losing. If I do the same thing back to you, I'll still lose, but I'll lose less. And you will also lose. Right? So yeah, that is my best strategy is to do tit for tat. You tariff me, I tariff you. You raise tariffs, I raise tariffs. You yell at me, I yell at you. You move your troops to the border, I move my troops to the border. Tit for tat. Right? We both lose. Other countries respond with their own tariffs. Both countries will suffer. True. The clear answer would be for both countries to remove tariffs to maximize mutual. Can I click on read more here? Mutual benefits. There it is. Mutual benefits. But Trump seems to disfavor that strategy. Yep. Trump needs to read a victory speech. He whatever happens, he will read his victory speech. Even in the White House right now, Trump is claiming victory on a whole bunch of things. If you listen to the press secretary, there's a whole list of things he's claiming victory on, even though none of it is true. Just claim victory. This is newspeak. For example, Canada tariffs our dairy products 250%. This is true. This is true. Canada does have a 250% tariff, but so does the U.S. On dairy product going into the U.S. So does the U.S. Here's how it works. There's the level of tariffs. Anything above here, this is volume going in, and anything above here, there is a tariff, and a big one. This is tariff-free. This is the tariff-free zone, where the U.S. can send dairy products into Canada, and here is where the U.S. is. They haven't even breached the level where tariffs start. They can send more in with no tariffs. Come on, bring it in, send it in. You can send more in. We're okay with that. Go ahead. You're well below the tariff level. But they don't. So if we remove this, what would it do? What would it do? If we remove that, we would want the U.S. to remove their tariff on Canadian dairy products going in, which is just as high. They don't mention that. So it's not even a half-truth, it's like a quarter truth. Yes, this is true, but say that it is a level, they say that there is a tariff-free level of volume, and say that the U.S. has never, just doesn't exceed that. And say that the U.S. has retaliatory tariffs as well. Not retaliatory, has the same level of tariffs on Canadian dairy going in. Never says that, right? So when you can make anybody look like the bad guy if you only list 3 or 4 things that are true without listing the other things that are true, right? You can say, well, this person lied. Well, yes, they lied to save somebody's feelings. Wow, that's a different story. That's a different story. Jean Valjean stole bread. He's a criminal. Yes, but he stole bread to feed his family. That's a noble deed. Say the whole truth, right? How can I determine whether me outperforming SPY is actually due to skill and not chance? Yeah, that's a good question, right? Usually in attribution analysis, we have something called alpha plus epsilon. And alpha plus epsilon is attributed to the manager. Skill and luck. Skill and luck. Right? So what part of your excess return was due to skill? What part was luck? Nobody knows. Hard to tell. If it's repeatable, if year after year after year after year you're providing some excess return over your benchmark, then it's more likely that there's some skill involved. Hold a handful of stocks for the long term, normally sell calls, puts, depending on the market. Even getting a little lucky or unlucky can have a big impact. Yeah, there is, and luck goes 2 ways, right? You could have good luck and you can have bad luck. And some part of it is you could be invested in something that outperforms and a meteorite crashes from the earth and takes out the whole project you were invested in. That's bad luck. I mean, no one's going to hold your feet to the fire for saying, you didn't see that coming? You couldn't figure that out. No one, it's like, who would have known? Who could have seen that coming? So the bad luck can take you down, but no one would accuse the manager of being unskilled in that sense. But how to pull it apart? Academic papers have been written about that. I don't think there's any conclusion. With how small cap has been correlated with large cap for the past 15 years. 15 years is too long of a look back period. Too long of a look back period. Do you believe it's a true diversifying factor? Well, correlation doesn't say anything about magnitude. It just says correlation. So let me show you some correlations of one. Um, let's say you have x and y. You have two variables, x and y. There's a correlation of one. 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 They're all correlations of one. It means when one moves, the other one moves. That doesn't mean it moves in the same magnitude. So y equals 2x. X and y will have a 100% or a correlation of 1. But x will move twice as much as y, right? So correlation doesn't tell us much about magnitude. It doesn't mean 1 for 1. Many federal employees have a deferred last working day. Okay, right, okay. Do you still have your Tesla puts? No. Last Q&A asked, what is good news, what is bad news? You say, give an example. Let's take Trump putting tariffs on different countries like Canada. Is that good news or bad news? Bad news for Canada, bad news for U.S., good news for Europe. Depends, again, it depends on what side of the gun you're standing on. Previous conversation, what I conclude is that it depends on what is your position. Exactly, like buy, hold, or sell based on your experience, and if the news makes you profit for you, it's good news and vice versa. There you go. Good news is whatever makes your life better, whatever improves your situation. Maybe bad news for everyone else, but good news for you. So if I short airline stocks, and 3 or 4 airlines have significant crashes, let's say they're flying Boeings, and all these Boeings, somebody hacks Boeing, and planes crash around the world, that's bad news. Bloody good news for me. Aha, get that? Bloody good news. Yeah. That's pretty morose. But it would be good news for me. So, again, depends on what side of the gun you're standing on. What are your thoughts on the new PM of Canada? I don't know yet. I haven't seen enough of him. I hope he's a classical liberal and not a Trudeau follow-on. Possibly long euro. Are you considering that the ECB may have to wrangle you? Right away. I'm going to stop here. Whatever position you think, long this, long that, you can always come up with a list of saying, well, what if this happens? What if that happens? Are you considering going long this, considering this and this? Well, this is the world we live in. You're never going to find a long position to take that doesn't have a whole list of objections or a whole list of worries that you have to worry about. You're just not going to find that. I would tend to look more for flows of money. Where is money flowing to? We could have said, and I did, really, for on a year and a half, say the same thing about the SPY. At these multiples, at these valuations, how do you see this going higher? And it did, and it did, and it did, and it did. Last year, 57, or was it 59 new all-time highs at forward multiples of 22, 23, right? So the big objection just didn't matter. It just didn't matter. Because it was performing, so more money went into it. The more money went into it, the more it performed. The more it performed, more money went into it. So if you get the same type of momentum with the Eurozone, more money going into it could create the very success that has been lacking for some time. You can see ECB may have to wrangle yields with QE if Germany's 500 euro bond sale isn't met with as much enthusiasm. No, okay. Maybe not. I mean, it's hard to answer these questions about possible scenarios for the future, saying, have you considered this, have you considered that? Well, there is no end to have you considered this, have you considered that for any position you want to take. There is no end. And then you end up with paralysis by analysis. One of the things that we learned down here, every week, the new week that came in, Monday, was always about the individual. Because if I can get you out of your portfolio, I've removed the riskiest asset in your portfolio, which is you. The biggest problem is loss aversion. And it comes in several flavors. You have gains on your stock and you think, I better take them before they disappear, because you want to avoid losing them. You have losses in your stock and you let your losses run because you don't want to take those losses. You look at an investment and you spend too much time with, but risk. I see this risk. Oh, and there's this risk. Oh, and there's this risk. I don't want to lose any money. Look at all these risks. Meanwhile, off it goes. That's the most dangerous loss aversion, is that you get so occupied with all the possible risks of why it won't work out, you never do anything. And you have an error of omission. The error of omission is that you fail to act when you should have. So loss aversion is probably the biggest thing. Getting out of something way too early, not getting out of something early enough, those are acts of commission. Acts of omission are not getting into something you should have gotten into. No risk, no reward. You don't have a portfolio of rewards, you have a portfolio of risks. So yes, there are risks. So you take a position in the euro, and I say to you, what is your risk management strategy? Well, I'm out at this level. That's all. You have a level at which you say, that's it, I'm out. But to worry about taking losses, is you're gonna have losses. You're gonna have losses, get over it. Or find another game to play. You need to take on risk if you want return. Your job is to manage that risk by saying, how big of a position shall I take? It is this size and no bigger, nothing big enough to hurt you. And when am I out? At what point do I say, that's it, I'm done? Clearly I was wrong. And if you manage risk, return will take care of itself. So yes, you can go on and on about, have you considered this? Have you considered that? There's no end to that. That is called paralysis by analysis, where you analyze the risk so much, you end up doing nothing. So do something, but have a risk management strategy that says, okay, I'm going to do it. Let me get this risk profile. If it works out, great. If it doesn't, I know where I'm out, right? What if other countries also, see, we can keep going on and on. Why not buy this stock? Yeah, but what if this? What if management does this? What if this happens? What if then buy T-bills? Yeah, but what if the U.S. does what? Well, then put your money under the mattress. Yeah, but what if inflation is, see, you can go on and on. Risk is everywhere. So is opportunity. Opportunity is everywhere. Risk is everywhere. When you see opportunity, I guarantee you there's risk. Where you see a bunch of risks, I guarantee you there's opportunity. Right? So take advantage of the opportunity and just manage your risk. You'll never find something that has no risk. Even love has risk. I was going to say love has some of the greatest risk. Shortage of skilled workers is a comment I found in Intel's latest 10K, also in General Electric. CAT, tariff and push towards U.S. manufacturing. How is U.S. going to find skilled labor? Well, yeah, I can see that. They want semiconductor to manufacture here in a month's time, car manufacturing to move here in the U.S. They think the federal workers laid off will find jobs in manufacturing push, therefore jobs market won't be impacted. I don't know what they're I don't think they have a plan, an operational plan. I think they have a plan saying we're going to do this, right? But I don't think they have an operational plan of, okay, how are we going to do this? It's just, we're going to do this. We're going to the beach. Great. How are we getting to the beach? What road are we going to take? How many people are we going to go with? When are we going to fill up with gas? Where are we going to stop along the way? Are there stops along the way? Is that the right route to take? What time will we get there? What is the weather going to be like? I don't think they have any operational plan other than we're going to the beach. Everybody in. Brother man has a pool, but not an office room that has good. I have an office. But it's inside, and I don't know if you've been down here. It's like 30 degrees, no humidity, nice weather. I'm sort of isolated where I am. You're not going to hear city streets or city sounds. I got a 180 mountain view. I look out and there's just mountains everywhere, blue sky above, a nice shimmering pool over there. There is noise when I'm here, because when I'm here I say, that needs to be fixed, that needs to be done, this needs to be done, let's get it done while I'm here. Because I want to see it done, I want to supervise it, I want to make sure it's done the way I want it to be done. So every time I'm down here, it's work for the staff. Not for me, for the staff. The guy could be trading the market. I think he is. I think there's a probability higher than zero, and that he's a Russian agent. I have heard this before. This goes back to his 1987 visit to Moscow, where when he came, I guess when he came back, he suddenly had a whole bunch of money to do things that he didn't have before. I've heard that before, and that the reason he's leaning more towards Moscow these days is because they have a KGB dossier on him that says he did this for us back then, and that's the last thing he wants getting out. I have heard that before. We'll never know. However, it fits, but just because something fits doesn't make it so, right? In both terms, he has been too friendly. In fact, Russians helped him in both elections. Yeah, so I've talked about types of evidence before in a video. There's inculpatory and exculpatory evidence, right? And then circumstantial. Inculpatory evidence is a lack of evidence to say that you didn't do it. Exculpatory is evidence that says I didn't do it. And there's neither of those, at least as far as we can see. So there's only circumstantial evidence. And you could say, well, the circumstances seem to fit. Yeah, if it were true, it does explain a lot. I think we can say that. Rather than say, oh yeah, there must be some fire. Where there's smoke, there's fire. What we can say, I think, is if it were true, it certainly explains a lot. If it were true. Like I grew up with just to give you a story, I grew up with a grandmother. And sometimes there was some erratic behavior. There's certain things that she did that didn't seem to make sense. And sometimes, you'd ask for something and, she'd say, oh, we'll see the next day, or she'd say yes. The next day you say, well, are we going to do this? She says, I never said that. And you think, yes, you did. You said it yesterday. Turns out later in life, I find out that she was pretty much an alcoholic her whole life. She she just hid it really well. When I found that out, everything made sense. It's like, oh, well, that explains a lot then of that, right? So we can say that if this were true, that he is a Russian agent, you would look at all of the behavior and say, well, that explains a lot. But that's just circumstantial. Until we know for sure, that's all just circumstantial. If Russia ever did expose that evidence, they would lose that playing card. I mean, they would lose that instantly. Once the truth is out, you lose it instantly. If somebody has something on you, your best course of action is to get ahead of the truth before they tell it, and then it takes away all their power. If you can handle it, if you can handle that truth being put out there, you may as well own up to it yourself first. Thoughts on Trump's kitchen sinking the economy? I think his methodology and the methods he's taking will do that. I don't think that's his intention, though. Because it's Biden's economy. Remember, it's Biden's economy, not his. Manufacturing, a market recession to drive down interest rates. Yeah, I don't think so. I think it's a consequence, and as a consequence, you say, well, at least we'll get this. But the well, at least we'll get this does not make that must be the plan. Please tell me how I get the Discord link. I've already answered that one. You are witnessing the death of American capitalism. I haven't seen it, but I don't think we're witnessing the death of American capitalism. I think if anything, if we continue on this course, we may be in the early stages of witnessing the beginning of American isolationism, and with it, probably a reduction in the vibrancy of U.S. capitalism, but certainly not the death of U.S. capitalism, because Trump is not a socialist or a communist. So no, I don't think that. I think we need to use different words, but we are potentially witnessing something. That's good. Eh? We are potentially witnessing something. Something will happen tomorrow. It will either happen or not happen. Look at my forecast. Bessent on CNBC said they will still pursue strong dollar policy. Is this something he has to say? Well, yeah, you have to say strong dollar policy, because if you don't, you can't control the direction of where you want to go. You pretty much, that's the right thing to say. Other than trade and debt management, how does a weak dollar help the U.S.? Well, it fixes a lot in terms of the trade balance, right? It does take a long time for trade patterns to change based on currency movements. But if there is a lack of defense of the U.S. dollar, trade flows will change. You can also get your citizens, your consumers, to start buying domestically produced goods instead of foreign produced goods by simply having a dollar that makes foreign goods way more expensive than what they are now. Let's see. Not including real world consequences. This is an entertaining time. Yeah, not including that. Yeah. Is it important to have a solid accounting background before doing a CFA? No. Have an understanding of it. But a solid accounting background? No. Maybe getting a chartered accountant? No, that would be overkill. That would be overkill. Jolt showing up so late is just noted calendar quirk, non-normal rhythm. Yeah, I figured it was something minor. I just didn't have the motivation to dig into, well, why is it a week late? I don't see him backing down on the tariff issue. For what I've heard, his reasons a tariff are a mechanism to help reduce taxes. Yeah, he's misinformed. He's mentioned a couple times in public, tariffs will be used to pay for these new tax breaks. Again, so you'll get some revenue from tariffs, but you'll create unemployment and you lose that revenue from payroll taxes and income tax. No tax on tips, no Social Security, etc. No tax on tips is so that he doesn't have to pay his caddies. He can just say, you'll work for me for free because I've already given you a raise. Your tips won't be taxed. So everyone's standing in line to work for free. You'll work for free. Otherwise, I'm not paying you to work here. You'll volunteer to work here for your tips because there's no tax. It's so that he doesn't have to pay his caddies. I believe he has promised the budget hawks in GOP. I believe that deal is dead too. Backing down is a lose-lose-lose. Going forward is a lose-lose-lose. Going on the path that he's on is a lose-lose-lose as well. I don't see it from this guy. No, I don't see it either. I don't see him backing down. I don't see him changing. I think we are in a short everything, U.S.-based short everything market. I don't know where the S&P is now. Give me a second. I will grab my iPad because IB quit on me unexpectedly. If you were watching, you would have noticed IB quit on me unexpectedly. So let's just use the iPad. We'll log in. Let's look where SPY is. 551. We did hit correction territory. 551.17 is correction territory. It is 3:37. We got 23 minutes left. We're at 551.04. Now, if we 550.99, if we finish here, it is officially correction territory. Ouch. That hurts. IWM at 198. It is an ugly day. Overall, FCX doing well. I've done well on FCX. Thank you very much. TLT up today. Thank you for that. Even though it's, I don't think it should be at $90, but it is. And I was short SPY in pre-market. I think I may cover by the end of the day. Thank you very much for that. But overall, I'm in red ink this week. Who isn't in red ink this week, right? Anyways, that is it for the Q&A.